Welcome back, everyone, to NYU Grad's daily podcast on stocks and finance. Today is Friday, January 12th, after market close. Happy Friday, everyone. Glad you are with me today. Let's cover, because there's a lot to cover today, just closing out the week, going into a 3-day weekend. And there was just a crazy week, all in all, with everything going on with Bitcoin, the CPI, the PPI, but I don't want to go off on a tangent. Let's go to daily breadth numbers. Today we had a very bullish skew of 588 new highs and only 140 new lows. So that's like 4x to the upside, which is healthy. And when you take a look at advanced decliners, you had 52% of shares advancing versus 43% declining. Still yet a bullish skew. We had, very similar to yesterday and the day before, 26% of shares below its 50-day moving average and 34% of shares below its 200-day moving average. So headline numbers, the Dow was down 118 points or 0.3%. The NASDAQ was up 2.57, 2.5 points, which was basically a nothing burger. It closed just at where we previously closed on Thursday. But the S&P also was up marginally 3 points. It tried to make a new lifetime high, but got rejected in the morning, right at 10 o'clock. It closed up 3.5 points, up 0.08%. But the Russell didn't do as well. And really, the big story since the CPI and PPI numbers came out yesterday and today, it really has been this whole Bitcoin ETF trading that has started this week. Leading up to it, Monday, Tuesday, Wednesday was just all news about it. And then Thursday was opening of trading, and it was kind of lackluster. It closed near the bottom. Bitcoin sold off from almost 50,000 on Thursday. And then today it continued to sell off across the board, whether you're talking about Bitcoin, whether you're talking about Coinbase, whether you're talking about MSTR, which is Michael Saylor's company, MicroStrategy, or Marathon Digital. It was just across the board sell mode for all of anything to deal with Bitcoin. And I warned you guys, I warned you that stocks are sold. And just as a refresher for new folks, what that means is when I say stocks are sold, it's the premise that when you buy Apple, when you buy Bitcoin, when you buy Tesla or Nvidia, yeah, in your head, it's kind of like, that movie with Leonardo DiCaprio. Oh man, I'm having a lapse of memory here, where it's talking about the dream world, and Inception, obviously. So you may think you're all smart buying Tesla or Nvidia, but somewhere along the line, either one thing or multiple series of things, whether it's CNBC, Newsflow, your cousin, your wife, your husband, your coworkers, planting seeds. You gotta own Nvidia. You gotta own this. You gotta own that. You gotta have Bitcoin. You gotta have Ethereum. Just over time, these ideas are planted in your head, like that movie Inception, and eventually, you do not know who actually came up with the idea to buy that thing. So that's what I mean by stocks are sold. Everything on Wall Street is geared towards slowly or rapidly taking your wealth, your hard-earned money away from you. And this is just how it's set up, very much like a casino. Um, and the whole point of this game is to play the infinite game, to stay in this for the entirety of your lifetime and win. So you can pass something hopefully down to the next generation, or when you have enough, you just spend it all, the last penny into the day that you die. And it's the way it's set up. Okay, there is a sell side and a buy side on Wall Street. The buy side are the part of the institutions that create all the products to sell to you and I, the retail investor, as well as create all of the financial products to sell to governments, to businesses, to pension funds, etc. So they're the ones creating the financial products. And then the sell side, usually in the same walls, right? Their job is to go sell all of these products to institutions, to retail investors. And in that network, they have a army of analysts, pundits, CEOs, to trot onto news outlets, CNBC, Bloomberg, all the online media channels, social media, to start to sell what the buy side has created. And that is how a lot of these hedge funds, financial companies on Wall Street make their money. So that's why when you see an army of news, whether it's print, digital, video, just leading up to the sale of something, the availability of something, someone's trying to sell it. And then you have all of these, Michael Saylor, Tom Lee, Kathy Wood on television just throwing out pie in the sky. I'm sure they have a math equation that gets them there, but they're saying that, Kathy Woods was saying the base case is 600,000 per Bitcoin, and best case 1.5 million per Bitcoin within a decade. And within next year, we might see 150,000 per Bitcoin. So it's like a tripling of where we are now. And sure, it might happen, but when you start seeing this on repeat everywhere, you must know that they're doing this to fleece us, okay? They're not doing us any favors. And then, everyone, I don't even trade Bitcoin or crypto, but I remember, all of the press leading up before the Bitcoin ETFs, why everyone should invest in Bitcoin. It was the anti-fiat money, anti-Federal Reserve, anti-government, to keep everyone that's, controlling the system away from your wealth. Well, now it's centralized. Wall Street has the ability through these ETFs, through BlackRock, Invesco, Fidelity, to really drive the narrative. And it's only a matter of time. If eventually, when all of this smoke settles and you get any type of positive action on the price of Bitcoin, you're going to start to see 1x, 2x, 3x inverse or bullish ETFs. Now you're going to have options on all of these issues. You're going to have 0-day expiration options going out. And I think there's going to be a lot of horror stories. So just be careful. I'm sorry for going on that rant, but it really pisses me off when I see Wall Street doing this, and just a lot of it. I wouldn't say innocent, right? Because the knowledge is out there for you all to educate yourselves. But, marketing works, okay? whether they're selling stocks or whether they're selling sugar products or fast food, marketing works. And we're just being marketed to nonstop about this. So it just pisses me off when I see it. So, one thing I noticed moving off of this subject, I might come back to it later regarding Bitcoin. The things that really summarized the day for me was Tesla. Tesla right now looks like it's at the edge of a cliff. Tesla is below its 200-day moving average markedly, and it can't even bounce to test it. It just looks like it's going to jump off the cliff. And I just get vibes of BlackBerry. I remember when everyone in the world had to have a BlackBerry. Every CEO, down to every trader, every tech executive just had to have a BlackBerry. Same thing with a Tesla, right? It's the must-have car if you're in Silicon Valley or you live in California. And that kind of got pushed out, to pockets of the country like Florida and Dallas or to areas of Texas. But now it's becoming kind of commoditized. They're not the only EV maker, still one of the largest producing manufacturers of EVs, but BYD is taking over in China for unit sales there. And I think between Audi, GM, Ford, Toyota, they're releasing like 5x the number of EV models in the next 2 years. So not only is margin compression going to be a big problem for Tesla, we're seeing that today. Elon Musk and Tesla are dropping their own MSRPs for many of their models, but now we're seeing the used car market like Hertz. They announced that they're selling 20,000, which is all of their EVs, and out of the 20,000, I think 80% of those are Model 3 or Tesla variants. So while 18,000 cars that are Tesla priced at $17K, which is below California rates. Like my brother-in-law is out in California. They're selling those at like 30,000 out in California, but you can buy them for $17K from Hertz. So that's hurting the resale market and just the residual value of Teslas. So that's going on, price and margin pressure. But then they're going to have market share pressure globally. So I think there are a lot of headwinds or obstacles for Tesla. And I know, the bullish stance is, hey, Tesla's not a car company. It's a platform. They don't have to ever make a car ever again. I've heard all of this. And they can just outsource the platform of, autonomous driving to other companies. Show me the numbers that they actually have the ability to do that. I just see regulations and lawsuits against autonomous driving, and I love cars. I love to drive for fun, not for doing routine things like going to get groceries, but like whenever I like to go on road trips and stuff. Autonomous driving will never work, ever, unless there are regulations that say every car has to be on a standard of autonomous driving, because otherwise you're going to have a mixture of human drivers with autonomous drivers and different classes of cars, whether it's a semi-truck, a commercial van, or a Kia two-seater commuter car. And it's just too much chaos for not only autonomous software. I don't care how good the AI is or how good the cameras are. It's also not only just logistically on the roads, but also who do you sue? Because car accidents will happen. Do you sue the car manufacturer? Do you sue the city and the roads? Do you sue the car owner? Who is liable for these collisions? That's what I want to know. So yeah, autonomous driving nationwide is not going to happen until you see top-down legislation that prohibits humans from driving, because then it weeds out the faults, right? And then if a Tesla autonomous car crashes into a Mercedes autonomous car and both cars don't have steering wheels, then the humans are out of the equation, right? So it's either going to be manufacturer against manufacturer, or it'll be like, oh, the roads were not paved correctly, or there was an issue with the highway. The lanes weren't kept, so the camera didn't know where the lanes were. Like, there's a whole downstream effect of autonomous driving. So every one of you that are driving autonomously in California, you all need to check into a mental institution. It's just software, and you're allowing it to potentially drive you into a wall. It's just, again, so that's another headwind, I think, for Tesla. Show me that they can outsource either the autonomous driving or their battery tech that's like supposed to be Star Trek light years ahead of everyone else, when all I read about is all these solid state batteries coming out from Japan, like from companies like Toyota, where you can go 900 miles in one charge, and you can charge like in 10 minutes. So the whole thing, like, I think I'm very bearish on this, because I think it's silly for someone to pay $100,000, $50,000, $40,000 to a company to become the beta tester for that company, and then the asset that you have acquired, the car, depreciates even faster than the ICE car, because you have all of these market pressures and the manufacturer cutting price on you after you've purchased it. So I don't get it. Moving on. I can go on this for a while, but that's another thing that stood out to me. Tesla looks really bad. The 10-year is not selling off. They're really trying, but it's sticky here at 3.9 to 4%. Whatever happens to the 10-year yield is going to basically decide the fate of the market. I think we're either going to go to 4.5 plus, or we're going to go 3.5 and below. There's no sideways action on this. It's going to be either or, light switch on, light switch off. Real estate shares, despite the 10-year being red, it was red marginally, the real estate shares were all red today. It might just be pulling back, I don't know. And then energy was the leading sector today. Oil and natural gas are up on most definitely the Middle East and the war, and the Ukraine and Russia war, and weather. I rarely ever post about weather, but I did this week on Substack Notes. There is a very big Arctic front that's coming into the majority of the country on Sunday, and it's going to last like a few days, like almost a whole week. And average temps the temperature's going to drop below average temps by 30 to 50 degrees, depending where you are. So I think it's going to put a lot of strain on our electricity grid throughout the country, and we'll see what happens. So if you're in kind of like that sweet spot where it's going to be really cold, I hope you have generators and backups just in case the electricity, if your heat is electricity run, that might struggle next week. What else did I notice today or this week that I can call out? There's a lot, and I don't want to go too long here. Also this morning, I also saw that that there was a volatility trader that dropped $17 million on a bet that the volatility index, or the VIX, will trade above $17 by February 14th, Valentine's Day. Now, I also have positions in volatility. As you know, if you've been following this Substack and the podcast, I've been praying for single-digit VIX so I can just load up the boat. I've been building my position, keeping us a little bit of powder dry for single-digit VIX, but I don't know if we're going to ever get there. So I also, this week, have been building a position, bullish VIX, and then I saw that news come across the tape, and I had a mixed feelings. Initially the obvious one would be, hey, it's like a bias confirmation, like, oh, I must be right. Someone out there that has $17 million to make a bet on volatility is agreeing with me. I must be smart. But that's usually not the case, and that's usually more than it seems is happening, because the reason I have very mixed feelings about this is, what if this is just a hedge fund that has a $500 million long position on the Magnificent Seven, and they just wanted to hedge their bet and bought insurance of $17 million? Like, whoop-de-doo. So people at BlackRock could do this on their Bloomberg, on their terminal, and their trading terminal, and not blink, right? It's options trading. It was a big order, but you never want to take a headline or a big trade like that as the headline news, like, oh, someone's bearish on the market and bullish on VIX. It literally could be a tiny hedge on a giant bullish portfolio. So we'll see what happens here. So that was also notable today. What else I'm going to kind of just rattle off what was strong. So uranium was up 8.28%, no doubt, with the war. A lot of gold and silver issues or stocks were up today. PAAS, Pan American Silver, they're up 5% today. Kinross Gold up 4.62% today. UVIX, which is a double long VIX, is up 4.13% today. TSLQ, which is a Tesla short ETF, up 3.76% today. GDXJ up 3.4%. Barrick Gold, ticker Gold, very convenient, up 2.86%. Zoom, the video conference company, is up 2.86%. GDX up 2.84%, and the VIX itself was up 2.17%. I mentioned Tesla earlier. I will share a screenshot of some of their for sale Model 3s down in Florida for $17K. I saw this by Car Dealership Guy on X. After the EV credits, you're looking at like $14K for a Model 3. It's used, but I'm sure Hertz does a decent job of maintaining their vehicles because they see that as a potential future asset to sell, like they're doing right now. So if you're in the market for a Tesla Model 3, you should look at Hertz and buy used. I would never buy an EV new, never, ever. But if you can get a good condition Model 3 maintained well from Hertz for $14K out the door after the EV credit, that's a good deal. You're not going to lose too much on that money, on that investment in that asset. It will depreciate, but it won't go from like 30 to 10. It'll go from like 14 to 10, right? Because eventually a car will stop depreciating when it gets to the scrap metal price of a car. So I would do that if I were you and looking for an EV right now. My brother-in-law tells me that these cars are going for $30,000 out in California, near Silicon Valley. So I'll also share a screenshot of Tesla's stock. It looks like there's a analog from 2020 to 2022, and if this trend line breaks, I think we could be going down to 150 from here. We closed at 217, I think. I think if we go to 150, and if 150 doesn't hold, I think we could go down to 104 or $100. So this is a big moment for Tesla. It has to defend this trend line. It has to find its way above the 200-day moving average, above the 50-day moving average, or it's in a lot of trouble. I'm going to rattle off some losers. This is a much longer list, and then we'll wrap it up for the weekend. All right, a lot of these, by the way, let me first do not all 11, but some of the Bitcoin-related ETFs. So FBTC, which is Fidelity's Bitcoin ETF, down 6.19%. Invesco's Bitcoin ETF, BTCO, down 5.74%. iShares Bitcoin ETF, IBIT, down 6.23%. ARK Innovations Bitcoin ETF, down 6.23%. IBIT. I'm sorry, that was iShares. ARK B is ARK Innovations. That's down 6.2%. Valkyrie Bitcoin, which is ticker BRRR, like BRR, for the Fed, down 6.17. Then you had Marathon Digital, down 15.27%. I think it went from $29 to $18 and change in 38 hours. And then you have MicroStrategy MSTR, down 9.45%. So outside of just the Bitcoin related shares that were down, you had Delta Airlines down 8.97%, Wayfair down 7.7%, Coinbase down 7.35%, Carvana down 7.08%. Then you had, I'm just like trying to skip Bitcoin related, AI down 4.2%, Rivian down 3.89%. You had Etsy down 3.7%, Tesla I already talked about, Roblox down 3.58%, CarMax down 3.19%, Lyft down 3.16%, KB Homes down 2.8%, Under Armour down 2.8%, VinFast Autos down 2.5%, MGM down 2.4%, Affirm Holdings down 2.3%, DRV, which is a bearish housing ETF, down 2.3%, Toll Brothers down 2.2%, Lennar down 2.2%. So that's just kind of a smattering of what is on my screen that I'm either watching or I use as just like as a barometer for different industries. So yeah, if you recall, the top of the hour when I started the show, I talked about the headline numbers, right? I talked about breadth being bullish. I talked about the indices not being too bad. Dow was only down 0.3%. The Nasdaq was up 2 points. The S&P was up 3 points. But underneath the hood, there's a lot of deterioration going on. And just as a quick reminder, if you haven't pledged, one of the benefits is I do send out real-time premium content that I'm already doing with pledgers, which I will continue to do with premium subscribers. And I sent out a premium post to pledgers on Thursday afternoon before the podcast, alerting them of a potential bearish setup and what to watch for. So if you would like to get that content, it's very simple. You just have to subscribe and pledge. So subscribing is free. You just go to nyugrad.substack.com, hit the subscribe button, enter your email, and then once you do, all of the subscribe buttons will turn green to pledge, a pledge button. And what that will do is bring you to a page where it has options where you can either pledge monthly or an annual basis, or be a honorary member as well. And Substack will take the credit card information through Stripe. It's secure, but nothing will be charged to your credit card. I haven't launched the premium service yet. I will be launching that once the Substack can get past 3,000 total subscribers. We're over 2,000 now. So at this pace, I'm guessing before the end of Q1, I will launch the premium service. But I've already started sharing some content with pledgers as a preview. So that's just a quick, friendly reminder. Definitely not necessary. You can totally just stay as a free subscriber. I post a ton of content that way as well, and the podcast will always be free as far as this format goes. There'll be other premium only portions of the podcast as well, and other content like webcasts and guest speakers. So, with that said, I know I went over the usual 15 minutes that I target, but I thought it was important to cover all of these bases with you today on Friday, going to 3-day weekend. And I will see you all after the Tuesday session. Have a blessed and safe and fun weekend. All right, bye.